In the wild world of cryptocurrency, some names keep resurfacing. One of them is Vlad Novakovsky. He's the mind behind Lighter, a decentralized exchange, or DEX, that runs without a central authority. Lighter isn't about buying Bitcoin directly. It's about trading something more advanced, Perpetual Futures, or Perps. Vlad believes Perps are the engine for crypto's next big leap, more than just a trading tool. They're a gateway to a new financial system. While other exchanges try to do it all, Lighter focuses on making Perp trading seamless and accessible, drawing in traders who crave speed and decentralization. The appeal: your funds aren't held by a single company, reducing the risk of losing everything if a business collapses. Vlad's vision is bigger than profit. He wants to build a fair, open, global financial system. He argues that tools like Perps are the building blocks for a new economic reality. For Vlad, this is just the beginning. So, what are Perps? Imagine betting on Bitcoin's future price, not by buying Bitcoin, but by trading a contract that tracks its value. Perpetual futures, or Perps, never expire. Unlike traditional futures, you can hold them as long as you want. This flexibility lets traders follow their strategies without a ticking clock. But how do they stay in line with the real price? Enter the funding rate, a fee paid between those betting up, longs, and down, shorts. If more people are long, they pay shorts, keeping the contract price close to Bitcoin's actual price. It's a balancing act, all automated. Perps are complex, designed for active traders who want to bet on prices rising or falling. They're not for the faint of heart, but their flexibility and power have made them the go-to tool in crypto trading. You can profit whether the market goes up or down. That's why Perps have taken over as the dominant way to trade in crypto. It's a whole new world compared to traditional investing. Why are Perps so popular? One word: leverage. Leverage lets you control a big position with a small amount of money, amplifying both gains and losses. With 10x leverage, $100 can control $1,000 worth of Bitcoin. A 1% move means a 10% gain or loss. This high-stakes environment attracts risk takers, especially younger traders looking for fast wealth. Platforms like Lighter are open 24/7, letting anyone trade anytime, anywhere. The global, always-on market is a huge draw. But leverage is a double-edged sword. It can wipe you out as quickly as it can make you rich. A 10% move against you with 10x leverage, your $100 is gone. This is the thrill and the danger of perp trading. The events of 2025 showed just how quickly fortunes can change. In crypto, the stakes are always high. 2025 was the year Bitcoin soared to new heights. Optimism and mainstream acceptance fueled a relentless price climb, smashing records. But much of the action wasn't from people buying Bitcoin to hold. It was from traders using perps on platforms like Lighter. Leverage let them multiply their exposure, turning small bets into massive positions. As prices rose, profits skyrocketed, creating a feedback loop. More traders, more leverage, more momentum. Headlines blared, and Bitcoin shot past $100,000, then $125,000. Stories of overnight millionaires flooded social media. But beneath the euphoria, the market was dangerously one-sided. Everyone was long, convinced the rally would never end. Leverage had inflated a classic speculative bubble. When everyone's on the same side, risk is lurking. The very tool that fueled the surge was setting up the fall. The market's foundations were shakier than they seemed. The stage was set for a dramatic reversal. In October 2025, the party ended fast. No single event triggered it, just a shift in mood, and Bitcoin's price started to slip. The first dip triggered liquidations for the most leveraged traders, forcing the system to sell their collateral. This selling pushed prices lower, causing more liquidations, a domino effect known as a long squeeze. In hours, Bitcoin crashed below $85,000. Billions in leveraged bets were wiped out. The profits of weeks vanished in minutes. It was a brutal lesson in the dangers of leverage. Yet, decentralized exchanges like Lighter kept running. No bailouts, no circuit breakers, just code. The market was shaken, but the system held. By January 2026, prices had recovered, but the excesses were gone. The crash cleared out reckless speculation. For many, it was a necessary reset. The industry emerged, chastened but stronger. After the crash, you'd expect leaders like Vlad Novakovsky to be cautious, but he's more optimistic than ever. He sees the flash crash as proof the technology works. The system survived, even if traders didn't. The real excitement now: regulation. For years, unclear rules kept big financial players away from crypto, but in 2026, US lawmakers are close to passing clear digital asset laws. For Vlad, this is the green light the industry needs. Regulation would open the doors for banks, funds, and institutions to join in. More money, talent, and resources would flow into crypto, building a stronger ecosystem. Vlad believes 2026 could be a turning point, crypto moving from the Wild West to the mainstream. A new, more stable era is on the horizon. For visionaries like Vlad, crypto trading is just the beginning. The goal? Decentralized exchanges that let you trade anything: stocks, currencies, commodities, even real estate, anytime, anywhere. Imagine trading Apple stock or London real estate tokens on the same platform as Bitcoin, 24/7. Blockchain tech could unify fragmented markets, cutting out middlemen and making trading cheaper and faster. A universal, decentralized marketplace would let anyone, anywhere, access global assets. The Perpetual Futures contract is the perfect tool for this world. Flexible, non-expiring, and adaptable. Right now, crypto is the focus, but the ambition is to build a parallel financial system for everything. Developers are laying the groundwork today. The dream? A global, efficient, always open financial system. The pieces are falling into place. For years, crypto has waited for the arrival of big institutions, banks, hedge funds, asset managers. Their entry is seen as the final step to mainstream acceptance. Regulatory uncertainty and lack of robust infrastructure kept them out, until now. As rules become clearer and platforms more secure, the barriers are falling. Vlad expects institutions to start trading Perps on DEXs this year, bringing massive liquidity and stability. This would transform Perps from a retail product to a tool for the world's top financial players. The convergence of DeFi and TradFi could spark a wave of innovation. The rebellious spirit of crypto isn't ending, it's evolving. So where does this leave us? Perps have become the engine of crypto trading: high risk, high reward. The 2025 crash was a reset, not an end. With regulation on the horizon, crypto is maturing into a mainstream industry. Institutional investors are poised to bring stability and liquidity. The vision: a single global marketplace for all assets, powered by decentralized exchanges and perpetual futures. It's an ambitious goal, rewiring how the world trades and invests. The road ahead won't be smooth, but optimism is rising. The fusion of DeFi's innovation with TradFi's scale could finally bring crypto to the center of finance. The question isn't if crypto will change finance, but how soon.